Alright everyone, welcome back to the channel for another Bitcoin update. So in this episode we're going to be doing some whale watching. Veterans of the channel should already know what's up. If you're new to the channel, warm welcome. Whale watching is a on-chain series in which we check out the network activity for Bitcoin. What are the retail traders doing? What are the whales doing? We're going to answer all of this and more in this video. So let's start off by checking the network as a whole before we jump into the individual wallet sizes and differentiate what's happening between retail and institutions. So looking at the network as a whole, we're going to start off on the active addresses. Now, I've talked about this many times on the channel before. Once again, if you're new, warm welcome. I hope you do enjoy your stay on this channel. If you do look at the active addresses, these are on a line graph on the top of the screen over here in blue. You can see whenever these spikes in the active addresses come about, it normally correlates to a spike in the price action for Bitcoin and subsequently a fall off the table as soon as we're done with the spike. So if you look back at the main data point I want to highlight here from December of 2017, you can see a spike in active addresses simply meant that the number of active addresses that were active in the network as a sender or receiver was spiking. Now, this makes sense that it correlates to the top because, as you can imagine, towards the top, lots of people want to take profits, lots of people want to sell. That is why we have these blow off tops, because everyone runs in and sells, and then there's no longer enough buyers to support us in the network. So with this, you can see spikes in active addresses correlates to the top in Bitcoin. If you didn't see down here, this orange line graph down here is the BTC USD chart. So spike in Bitcoin active addresses, top, you have a massive breakdown. You can see spike in active addresses, continuation of a breakdown. Spike in active addresses, continuation of a breakdown. Spike in active addresses, immediate breakdown followed suit after that. You can see as the price was running up to the upside and price really started gearing up before the active addresses did. The price started to spike, active addresses started to sell, and then with that, after active addresses topped out and everyone had sold, we rolled back to the downside for BTC USD. You can see we spiked in active addresses here, got continuation to the downside, and right now, once again, we're getting a spike in active addresses. Now, while this is a bearish signal, I mean, looking at this has got basically about a 95% hit rate. When you've got a run up in active addresses, it's not good for the price. And why this makes sense, once again, I mean, we talked about why it makes sense, but in the past week, this is what we're seeing. I don't think we can, the daily time frame doesn't work too well on this one, but we've been running up for basically the past week on the Bitcoin active addresses, and I'll just show you how this affects the price on a individual chart for Bitcoin. So if we do pull up the BTC chart, get rid of this, take this out of a line graph, put this on the candles, bada bing, bada boom, weekly time frame. How much have we been going down while the active addresses have been spiking? We're down about 4%. So nothing crazy, but we are currently getting ready to take out the lows on Bitcoin and drawing your fib. I fat fingered this a tiny bit, but you can see we're really fighting with this 786 Fibonacci. So not looking too good on Bitcoin right now while the active addresses spike. Now, while this is a bearish news segment, I would also like to highlight, I do not, like I always say, I always try and be as transparent as possible. What you can also see is the number of unique addresses that have appeared for the first time in Bitcoin transactions has also gone on a run up today. And while this is an indication of retail getting into Bitcoin for the first time, retail getting into Bitcoin is also not a bullish sign in the short term. For example, retail piling into Bitcoin for the first time in December of 2017 meant that the top was in. Retail piling in during June of 2019 when it was going on a run up meant that we had to come back down for that massive 2020 capitulation a year later. And as you can see, new addresses stagnate as the price goes down, which really just shows you retail kind of just buys in when the price goes up and sells when the price goes down. But what I would like to highlight from this is a long-term bullish indicator. Obviously, the number of new Bitcoin active addresses, you obviously want to see that go up over time because you want more people in the network. So what I will like to highlight from this is when you do zoom out, you can obviously see new addresses appearing over time becomes a bullish signal, but in the immediate short term, it's not a bullish signal. So like I said, while this is a bearish story, I do like to be as unbiased as possible. So I did also want to let you know that in another way of viewing this, I guess, maybe throwing a bullish note on this, is there are new people coming into the Bitcoin cycle. Now, let's throw another wrench in there. So yes, it's bearish, active addresses are spiking. Yes, this is long-term bullish because there are new addresses that are coming while the active addresses are spiking. So we can definitely say, hey, while the active address is spiking is bearish, a lot of this could be because of new addresses. Now, New addresses. Let's talk about it. Well, if we're getting new Bitcoin wallets, most people are obviously going to be buying less than 1 Bitcoin. They're going to be buying less than 10 Bitcoin, etc., etc. Obviously, not everyone can be a whale. That is why they are so rare. But nonetheless, right now, we do know that retail is drastically accumulating, because look at the Bitcoin wallets with more than 1 Bitcoin, and you can see they are on a massive, massive run to the upside. Also, I really like to look at these charts past 2017 for most of these, because when you are looking at the wallet sizes that hold more than 1 Bitcoin, more than 10 Bitcoin, more than 100, more than 1,000, they have basically all been going up since 2017. Which is just a sign of adoption while Bitcoin was in its nascency period. But nonetheless, in the immediate short term as well, retail wallets accumulating, which is what we're looking at now, Bitcoin wallets with more than 1 Bitcoin, is not always a good sign. You can see, they really started to spike as the top was in 2013. They had a blow off top in 2017 as the top was in. And you can see, if we look at what's been going on, they've been dramatically accumulating since 38,500. So looking at what the Bitcoin wallet sizes with more than one Bitcoin, or approximately around 1 Bitcoin, once again, we're looking at these retail wallets. You can see they've been accumulating since 38,500. Bitcoin is now trading beneath 20,000. So I think it's a no-brainer. We don't need to do a deep dive into this chart. Obviously, if you've been following what retail traders are doing, if you've been copying what the Bitcoin wallet sizes with more than 1 Bitcoin have been doing, you probably haven't had the best time navigating these markets, considering, as you can see, like I said, they FOMO buy into the all-time highs, and then they start dramatically selling as the bear market comes in, and then they don't start accumulating, well, they start accumulating very slowly as the price actually bottoms. So retail, I always like to do the opposite of what retail is doing. I'm actually not going to be looking at the wallet sizes with 10 BTC or 100 BTC today, because I really want to focus on the retail, which we've just looked at, and the whales. So what are the whales doing right now? This is the most important, one of the most important charts I've pulled up on this channel of all, and let me show you why. Look how beautifully whales have navigated through this market in the past couple of years. So as you can see, they did a beautiful job of just dramatically accumulating up until about 2016. And you can see with the peaks and troughs in the markets, they absolutely dominated. Now, looking back at 2012, when the bottom was in, they dramatically started accumulating. Looking back at 2014, just before we topped out and had our all-time high, the whales started selling into the bull run. So they basically started selling as prices started to go up. When did they start dramatically DCAing again? They started DCAing as the exact bottom was in. And you can see as soon as the bottom was in, boom, massive spikes, a couple of hundred of extra addresses really within just a couple of weeks or so. What happened after then? They very strongly accumulated through the 2016 sideways chop capitulation event. And then coming into the 2017 bull run, basically they were getting out of this the whole time it was going up. So they really weren't sticking around. When the top was in, what did they do? They started to basically do nothing. They sat on their hands for a year or so. When did they start to accumulate? They started to accumulate when Bitcoin was just in its last couple of months of capitulation. And then as you can see, when the bear market lows were in, they started dramatically accumulating again. So this is one of the reasons why I love following and looking at these whale wallets. I mean, even if you're looking back at what happened in the most recent bull run, this was actually an institution-led bull run. And I'll talk about that in a second when we look at the Bitcoin ratio of retail to institutional addresses. But once again, just another signal of why you should probably be looking at what whales are doing. When did whales start selling? They started selling when Bitcoin was at 46,000. And looking at what's been happening since then, whales have not been accumulating. So whales, once again, look over here, they basically topped out of accumulating at 46,500, and then they weren't interested in accumulating after then. They did start to accumulate a small amount round about February of March time. A lot of them actually jumped back in the markets when the prices were cheaper, around about that 40,000 mark. However, what actually happened after then is something obviously happened within the next few months, whether it was bearish geopolitical news, whether it was fears of war, whether it was fear of the rising energy costs. Something happened and these whales just started selling again. So when you do look at things in the bigger picture and what has actually been happening for the Bitcoin wallet sizes with more than 1,000 BTC, they have not been accumulating whatsoever since 46,500. Now, looking at this, you know, judging by it, even if the bottom was already in at 18,000, which I don't think it is, if whales started dramatically accumulating tomorrow, I think that would be another signal of, you know, why you should follow these whales, because at this moment in time, they're not bothered about accumulating in this market structure. They were bothered at selling at 46,500. So I'm interested in when they're interested in buying. So I'll be keeping you up to date on this. One other last tidbit I'd like to jump into is the Bitcoin ratio of retail to institutional addresses. Now, how I know that the 2017-2018 bull run was almost purely institutional led is because when you are looking at the Bitcoin wallet sizes that accumulated more than one Bitcoin, there weren't too many in the 2021 bull run rather. As you can see, it more or less just stagnated. So we know that this wasn't retail driven. However, look at what the wallet sizes that were holding more than 1,000 BTC, it perfectly follows the price. It was basically as simple as institutions started to accumulate. We all know tons of people like MicroStrategy, you know, Tesla, all of these big companies started to accumulate, and that is why these wallet sizes started to dramatically run up. But since then, institutions have not been in this market. Now, looking at the ratio of retail to institutional addresses, you can basically see this blue line is that ratio. When the ratio decreases, it means that more institutions over retail are in the market, and when this blue line increases to the upside, we know that there are, once again, more retail coming into the market than institutions. It says this over here. If you're wondering what a retail investor is, it is a Bitcoin owner that has less than 10 Bitcoin, and an institutional investor is a Bitcoin owner that has more than 1,000 Bitcoin. So with this, you can see a lot of the times when this ratio starts to move to the downside, meaning that institutions are accumulating or there's more institutions than retail, a massive drop meant a spike in the price action soon followed suit. And then over here, you can see 2017, a massive drop occurred as institutions were getting into the market. We went on a massive run as the top was in, institutions sold off. When did they start to accumulate? When the bottom was in. And then after then, you can see this ratio line, the blue line, goes massively to the downside. And once again, this means there are more institutions getting into the market than retail. And this is how we know this whole bull run was led by institutions. So what I want you to take away from this, why we care about this, is we know that retail are not the people who lead these markets. At least in the past market structure, retail was not the one to lead this. So what I'm going to be looking at now is for the whale wallets to start accumulating. I'm going to be looking for the retail to institutional addresses to start moving back down, meaning that institutions are getting back into the market. But right now, I'm really not seeing any bullish signs. Now, one other chart I'd like to share with you is the whale shadows. There's really not too much to update on this. The whale shadows is basically a chart that shows you old Bitcoin wallets that are either 4 to 5 years old, 5 to 7 years old, 7 to 9, or 10 plus years old. And it displays this on the BTC USD chart. And it basically shows you when these spikes in coloration happen, it means that old Bitcoin whale wallets are selling. Now, if we zoom into what's happened in the past week or so, you can see a plethora of times starting from September the 7th. So as soon as yesterday, you know, we're having orders of 250 Bitcoin, 220 Bitcoin. And then a couple of days before then, there were old wallets that had just became reactive that sold 1,600 Bitcoin. A couple of days before that, you know, we're literally looking as soon as September the 4th, people were selling 5,000 Bitcoin from one wallet. People were selling 500 Bitcoin. People were selling 600 Bitcoin, 2,000, 5,000, 5,000, couple of 1,000s over here. This one over here is hard to see. This is definitely about 4,000 or so. This, wow, yeah, this was 8,600 Bitcoin sold on the 25th of June. So right now what I'm seeing is some of the older wallets are becoming active and they are starting to sell, which may be one of the reasons why we're getting our active addresses spike, which also correlates to Bitcoin moving to the downside. But like I said, you know, the new addresses moving to the upside, while this isn't bullish in the immediate short term, it is interesting to see that we are running up. Once this does take a massive run to the upside and then starts pulling back, I'm going to get really bullish on Bitcoin, because as you can see previously, you know, we bottomed down here in December of 2018, and the active addresses how they correlated to this is the active addresses were really not active. They were all the way down here. I mean, if I show you, as you can see, this is when they spiked and the top was in, and when the active addresses were down in this accumulation phase, when it was really boring, that is when we actually bottomed. You can see spike in the active addresses correlate to the top in the market structure, but I really don't think until the active addresses roll back over and we get some chill for a month or so, and we start chilling out in these regions, I don't think the bottom will be in. So I think this is what will happen. You know, we'll slowly trickle down as the active addresses slowly trickle down in the next month or so, and then hopefully in the next couple of months, coming into the end of Q3, coming into Q1 2023, hopefully we get a spike after the active addresses start to bottom out. So that's all I've got for you today, my friends. Hope you did enjoy today's video. If you do want to follow me over on Twitter, it is here at 618_cowboy. But that's all I've got for you today, my friends. Cowboy out. Peace.